Hey friends, hello everyone. Today we're starting small with just $2 and we're gonna rev it up to a couple thousand. How we did it, you'll find out in this video. So watch until the end so you don't miss out on any details, alright? And cherry on top, well, rather cash in my wallet. I'll show you how to easily withdraw your money from the broker pocket option. Let's get started. Friends, today I plan to trade using this trading system. I have the shaft trend cycle and MACD indicators. We'll leave the settings of these indicators as standard. And I will also be using the downtrend channel. So let's talk about setting it up. It has only one parameter that changes, and it's the number of periods. I've set 10 periods in the settings, and let's see what's changed and figure out how to use this tool. So we get signals to buy when the chart touches the upper boundary of the downtrend channel. In the chart's history, we see it here, for example. At these points, we look for the opportunity to open a trade to buy. But pay attention, it doesn't mean we definitely open a trade, all right? Each situation needs to be analyzed separately, but more on that later. Conversely, we trade to sell when the candle touches the lower boundary of the channel, like in this case, for example. Friends, the downtrend channel is a tool for identifying trends and volatility. And if you use it for its intended purpose, you will get results. But often it's used incorrectly, and we will talk about the main mistakes today. So let's break down how to read signals in this situation. With the downtrend channel we've identified, here's a touch and a signal to decrease. Shaft trend cycle has entered the oversold zone, and the green MACD line has crossed the red one from top to bottom, which also indicates a downward trend. So here we should have traded to sell. If we now return to the initial settings of the downtrend, the channel range becomes a bit wider, and the entry point into the trade is caught with a bit of delay. Therefore, in today's market situation, the setting with 10 periods suits me more. But things change constantly, so friends, adjust the downtrend channel according to the chart you're trading on, okay? I will return to the 10 in the settings, and let's look for the first opportunity to enter a trade. How to make $5,000 out of $50. No, you don't need to add zeros. Just subscribe to my Telegram channel and follow a simple algorithm. Write me privately and I will give you a link to register on Pocket option, which will give you a 50% bonus on your first deposit. Now you have $75. Then join my marathon happening in my private club. There we trade with my signals along with other participants and rev up our deposit all the way up to $5,000 in a week. Every Monday to Friday, I start a trading session and share my signals. All you have to do is just repeat after me. And there you have it, $5,000. How to withdraw them, I'll tell you at the end of this video. Also, in my Telegram channel, you will be able to find previous results and reviews of my partners in our marathons. So, check out the link in the description of this video and don't forget to subscribe to the Telegram channel, alright? I will see you in my next marathon, and now let's get back to trading. Friends, I'm opening a trade to sell, and let's take a look at the chart. I'll tell you about such an option of the downtrend channel as determining market volatility. It can be determined by the distance between the upper and lower boundaries of the channel. The smaller it is, the lower the player's activity is at that moment. Right now, as you can see, volatility is very low. This tells us that the market is essentially in a sideways trend. And we can quite easily visually determine its boundaries. The resistance level is right here, and below is the support level. The chart is currently trapped in its corridor, so I'm waiting for a bounce from its upper boundary rather than any touch of the channel levels. And confirmation of this we see by the MACD histogram bars, or rather their complete absence at this moment. Well, a bounce from the overbought zone as an additional confirmation of all the previous analysis. supports my hypothesis, but not a decisive factor for making a decision in my case. The trade closed in the green, $3.76. That's our first catch. We're boosting the deposit today, so I'm directing all the income to increase the investments. Friends, we immediately had a bright example in the first trade. Many think that you should define support or resistance levels by the edges of the downtrend channel and use it only for these purposes. But it's primarily a tool for identifying volatility and trend direction. That's what it was invented for. And here's the clear confirmation. Open a trade to buy even though the chart touched its lower boundary and it seemed like trading down was the way to go, but no. Even though the chart now hints at breaking the level, I don't believe it at low volatility. Yes, the channel boundaries are expanding as the new candle updated the lows. And remember, the channel boundaries are built based on the last 10 candles. Still, the movement isn't too emphasized and I don't see any reason why the chart would break the level right at this moment. And here the rollback starts, and quite a strong one at that. Clearly, the sellers don't have enough strength right now. So friends, read the signals of this indicator correctly. I know it can be confusing, especially for beginners. Seconds remain until the trade close, and we closed very comfortably despite it initially seeming like a rushed decision. Almost $7 in the balance. Let's watch the chart a bit more. Many assume that breaking through the upper or lower channels of downtrend signals an overbought or oversold zone. And there might be a reversal. This assumption is incorrect. Trading with a downtrend channel is similar to trading with support and resistance. That is, we identify levels, determine volatility, and make a decision, whether the level will be broken or not. I've already made a detailed review on how to identify level reaches and what it really means. Find it on my channel and rewatch if you don't quite understand what I'm talking about right now. Since there are basic concepts in trading, without them moving forward and developing would be incredibly difficult. I would even say impossible in principle. But it's all in your hands, as they say. So let's get back to trading, friends. Oh darn, just opened a trade to sell, but actually there's a certain risk in this trade. Actually, I plan to open it from this resistance level when the candle was at its peak. Essentially, it's the upper boundary of the price corridor I've already drawn for you earlier. And ideally, the chart shouldn't rise above it. But I was a bit late and missed the moment, so I opened lower. But let's hope this mistake won't be critical. Anyway, I'm confident the price will go down, since the fact that the previous candle touched the lower boundary of the downtrend channel hints at a potential price decrease. But again, friends, despite the quotes dropping lower, avoid such mistakes, okay? Learn from mine. In this case, you should only have opened a trade from the resistance level. And here's a clear example of why. At last moment, the price almost reached the entry point, and just a bit of luck allowed me not to lose the deposit. Nevertheless, we earned $12, and let's look for a new opportunity for the next trade. And here, by the way, the same situation as in previous trade, but this time I chose the moment perfectly. I think there will be minimal risk here. So we see that the price has reached a strong resistance level, moreover with a very sharp rise against a weak but still downward trend. And by the way, note that at low volatility, touches of the lower channel boundary again are not a guarantee of a price decrease. A little earlier, it was still possible to open a trade to sell, and yet the next candle closed above the mark where there was a touch. That is, here too, there would have been a loss. Because the chart is again in a sideways trend, The price is trapped in a very narrow corridor, alright? I'm waiting for a decrease from its upper boundary. I don't see other options in the near minute. And despite the rise, confident that we'll close this time without worries. Just like that, perfectly chosen entry point and $22 already in the balance. Let's move on, friends. Opening a trade to buy, attention to the chart. Finally, we can dissect a situation when the downtrend channel becomes a trend indicator. So we see growth by MACD shaft trend cycle enter the overbought zone. We see that the chart is breaking through the upper boundary of the downtrend channel. And by the width of its range, strong volatility is obvious. Let's see how far the chart can grow to determine targets. So a strong resistance level at this mark. Therefore, on a small rollback that happened at this point, I open a trade and wait for growth to the resistance level. And beginners often make a mistake trading from downtrend levels. They think that if the price is in the upper band, then the market is overbought and wait for a rebound. But these lines are not resistance levels. You should identify them yourself to correctly determine targets, alright? For me, everything was calculated perfectly. Close the trade right at the target and almost $42 in the balance. I'll increase the investment size to the maximum and look for a new opportunity to trade. Just open a trade to buy. This situation is the logical continuation of what we did in the last trade. Let's dig into it. Only here is a mirror image. The price fell to the support level. Here too, the downtrend channel well showed the entry points for trades on a decrease. What's next? We see that the price stabilized at the support level. Here it is, the corridor where the chart is located. This is the price consolidation zone. The question is, which direction will the chart go after consolidation? I'm more inclined to growth. By the green MACD histogram bars, we can conclude a potential market reversal. The lines of this indicator are converging. The reversal can be pronounced or weak. But in any case, trading up from the support level seems to me a logical and relatively safe decision. The risk is minimal. And so it happens. Super! Analysis and choice of entry point are done correctly. 2 sevens on the trading balance. A beautiful sum. Let's reinvest it in future trades. Now, if I were waiting for a price decrease, it would be logical to open a trade at the upper boundary of the corridor. If expecting growth, then obviously it's better to push off from the support level. That is the lower boundary. Like for example now, again, a trade to buy, friends. Let's graphically explain once more what I was talking about earlier. Attention to the chart, here is the logic. As I said, I'm waiting for growth. Because by MACD there's a clear crossing of lines from below upwards, we see a fence of green columns. Therefore, I trade to buy, choosing the entry point as close as possible to the support level. If I were waiting for a decrease in the quotes, then I would look for an entry point so that it would be close to the resistance level, above which, in this case, the price is unlikely to rise. By the way, I somehow missed among all the explanations that I didn't invest the whole amount of the trading balance in the trade. I feel there will be a missed profit of a few dollars, since the chart clearly follows my forecast and there should be no unpleasant surprises. Very comfortably closing the trade, $137 in the balance, and this time let's invest the whole sum, okay? To really boost it, we're going all in. And friends, look how sharply the boundaries of the downtrend channel have narrowed. This means that market volatility has sharply decreased. So let's open another trade to buy even without touching the lower line, okay? Check out the chart, friends. This moment where the channel range narrows indicates low volatility. And low volatility means that levels will be harder to break through. So I'm trading with a simple strategy in a sideways market, waiting for a bounce from its boundary and expecting growth. But it's important to understand that volatility didn't drop at this moment, but earlier. However, the indicator considers the last 10 candles. So a minute earlier, the channel was built including a long candle from the previous drop. Now the indicator only works with the data from the short candles following the drop in the consolidation phase. You can pause the video and count 10 candles yourself. So when setting up the downtrend channel, consider the market specifics at the moment of trading, okay? And even better, pay attention to the specifics of the charts for each currency pair. I've already reviewed different currency pairs on my channel. You can rewatch those, alright? And write in the comments which currency pairs you're interested in if you want me to cover how to work with them. Alright? Attention friends, the chart is again dropping to the support level now. So I see no reason not to earn again, and I am opening an option to buy. By the way, beginners often perceive the downtrend channel as some sort of exotic gadget, as if it were VR glasses that haven't even become mainstream yet. In fact, this indicator was developed in the early 70s by Richard Donchian, a celebrated specialist in the field of technical analysis of financial markets. Therefore, friends, most indicator trading strategies have existed for decades. See, discovering something completely new here is almost impossible. Markets change, new assets appear, but trading principles remain the same. And although there's plenty of information, just take it and trade. Not everyone succeeds. Because the main principle is, indicators are just a tool, not a ready-made salvation. How you use them is up to you. So far, I'm doing without mistakes, $430 in the balance, and we continue. Opening an option to buy, friends, after waiting for a small rollback. Let's figure out what has changed. So, we see that the chart broke the resistance level as I predicted. Growth has started and the chart touches the upper boundary of the downtrend channel. Let's see where the price might go. I see a target a bit higher at the next resistance level. It's quite obvious and strong in my opinion. So I expect the price to rise to this level now. And we also have clear signals for growth from other indicators. Shaft trend cycle has emerged from the basement, the oversold zone, and the MACD lines have finally met and their crossing is complete. Could have waited a bit lower for the rollback. The candle's shadow dropped below the entry point, but predicting this at the moment of opening the trade is unreal. Even so, we get a confident result. The trade closes with a profit, $730 in the balance. Goals in this pair are achieved, so I suggest looking for a new opportunity to trade. Great opportunity to open a trade to buy. The situation is similar, but with its nuances. Let's dig into it. Currently, there's actually a bit of a new storm, and we see a huge green candle made a big move and touched the upper boundary of the downtrend channel. And what happens next? The quote's value sharply rose to the mark where the resistance level is located. It's right here. But I wouldn't say it's very strong. The chart slowed down in it insignificantly. So the main target I see is still another point, a bit higher up. Here it is. And the price hasn't reached this level yet. Now there's been a correction, after which I open a trade and expect to see it at this resistance level. And other indicators also show clear signals for growth. Shaft trend cycle entered the overbought zone and the green MACD line crosses the red from below upwards. And everything goes smoothly, friends. We've also crossed the $1,000 level in the deposit. Friends, there is now a risk for opening a trade upwards. The chart is too close to the resistance level, the target I had set earlier. So there's a risk of miscalculating the expiry. And on the other hand, there's a chance that the chart won't break at the current level and will bounce off it. The situation is complicated, so let's not rush and observe the surroundings. Now it's time to open a trade to sell. Let's figure out why I did this and what changed. Attention to the chart. So, where did everything go? Some glitch of screenshot tool apparently. Let's open it anew. Now everything seems fine, yeah. So, the chart grew to the resistance level. It's at this mark. I've drawn it before. All as I predicted. Even the price went a bit higher. But if you notice, the upper boundary of the downtrend channel is somewhat straightening. It indicates that the buying power is exhausting and growth is slowing. And if just analyzing by levels, it's logical to assume that now there will be either a price correction from the resistance level or a reversal. There might be a sideways movement as well. In any case, I'm waiting for a decrease from the level. With the correctly chosen entry point, it turns out to be almost a risk-free trade. Wonderful, friends. $2,206 already in our bank today. Remember, we started with just 2. According to market logic, a consolidation phase should start now, or a sideways market in other words. Let's watch the chart to see if that's the case and where the lower boundary of the price corridor is. I think the boundary is here. That's why I opened a trade to buy. Let's dive into the reasons for this decision, okay? It's important to recognize a market pattern. Prices always change progressively. What does this mean? The cost of quotes previously rose to this point, then some balance is reached when both sellers and buyers agree with the price and hold their positions. There are no sharp fluctuations and the price stabilizes in a corridor for a while. So we find levels and start trading only from these points, expecting a bounce. The duration of consolidation varies. Then the chart breaks through the channel either upwards or downwards. A detailed forecast can only be made closer to the end of this phase. I'm expecting a reversal as the MACD readings have changed. We see this by the red columns. I think we can confidently say that the analysis was correct, friends. We've crossed over $3,000 and let's look for a new opportunity for a trade. Opening a trade to buy, friends. Let's look in detail at what's happening in the market now. So we see that the price rose at this moment. Afterward, there was a phase of price consolidation near this resistance level. Graphical analysis shows a triangle pattern forming, so to say. Such a pattern typically ends with a price increase. Next, let's look at the indicator signals. Here we have chef trend cycle firmly in the overbought zone, okay? MACD lines attempted to cross but bounced off and started diverging. And the chart, after breaking the level, touches the upper boundary of the downtrend channel. So I waited for a small rollback and I'm trading to buy. We have a full set of signals that complement each other and do not contradict. The growth isn't too pronounced, but it's there. Great. We're earning another $880 for the balance, friends. Well, friends, I think it's time to draw some conclusions from today's trading session. The downtrend channel is a cool tool that can and should be used to make money. The main thing is not to make silly mistakes while working with it, okay? Honestly, I didn't always use it correctly at the beginning of my journey, so today I wanted to highlight the main mistakes that beginners make. And friends, by the way, there's now another great opportunity to enter a trade. I've already explained why the price will rise, and such pullbacks are always a great opportunity to profit from your forecasts. Back to the main mistakes, and the primary one is the boundaries of the Donchen channel are not support and resistance levels. Don't think the price will bounce off them, alright? Sometimes visually levels may coincide with boundaries, but it's just a coincidence. The Donchen channel is a tool for determining volatility and trend direction. Your task is to use this information correctly. Always use the channel in a system with other tools, okay? Oscillators can help. Look for your system, or you can use the set I traded with today. And this system brought me a good result, friends. The trade closes confidently. Excellent result. I made $4,886 today. Let's withdraw them from the brokerage account to spend. Friends, I'll be withdrawing in crypto. 4,000 today will go to my wallet. I'm entering the address of my Binance wallet. I'm withdrawing money in USDT currency. It's the most convenient and liquid instrument in my opinion. Hit the only button, continue, and voila! Now the broker will process the transaction for about 10 minutes. When the process is finished, I'll come back here and show you the result. This time it took a bit longer, I waited about 20 minutes. But 4,000 is already with me. And in the transaction history, we see a record that everything went successfully. Such a simple and easy way, without any fuss. That's all for today, let's sum up. Friends, we earned $4,866 today. Started with just 2. Where else have you seen such a return? I hope you find the trading system from this review useful and that it brings you good profit. I hope you liked this video. If you did, please like it and subscribe to my channel, and don't forget to hit the bell icon, then you will be sure not to miss any of my new reviews. We will definitely see each other soon, and until we meet again, goodbye.